Hey, it's Mac with PriceActionTradingSystem.com, and it's Wednesday. It's May 22nd. This will be our chart lesson for the day, and really it's just a range day. Um, Nothing spectacular here. There was an FOMC announcement. It really was a non-event. I marked it off here. Generally, you don't want to trade an hour before, and but really within 15 minutes afterwards, you could trade. You could really trade this thing the whole time, but it's still better just to kind of wait and make sure the market's not going to do anything crazy. And so the part here in the box is when you'd probably want to be out of the market. Generally, my recommendation is about an hour before, because a lot of times you'll get stuck in a little tight range right up until the announcement. It looks like this, and you just don't want to get hung in that and can't get out with a profit before the announcement comes. And then if you're in the wrong way, you're in trouble. So of course, if you'd have got long down here, you wouldn't have had any problems. It'd been an easy trade, but you just don't know. So you're better off to stay out. So that's why this is marked. Here was another little section that's just too congestive. I'd stay out of that as well. Not a lot of trades today. It won't take long to go through this, but you can see it's just a range day. Here's your overnight high. Here's your overnight low and everything. We actually broke out just a moment up here. Um, and then everything else pretty much was inside that. Actually, I take that back. Your overnight high is a little higher here because here's where the day started. So we didn't break outside. We traded within the overnight highs and lows all day. So anyway, I'm going to back out here a little more. Talk about actually one other thing I wanted to talk about. Somebody made the comment yesterday that a trade wasn't a second entry, that it was a double top, so it was only a first entry. Well, just to clarify that for anybody, for everybody, or anybody that's not sure, double tops can be counted both ways. So, and double bottoms can be counted both ways. And so, don't let that comment confuse you, because I'm sure it probably did confuse some of you. So, uh, here's a good example. Here's a double bottom. You can count that double bottom as a new low, and so that would be a first entry right there. So you got a new low, so it could be either a first entry and a second entry, or you could say, hey, this is a new low because we got a double entry, and then it could just be a first entry. So this could be a first or second entry, and the way you determine how you want to count it is you look at the context and you decide if everything else lines up, and if you like it, you take it. So yes, don't be confused about double bottoms. They can be counted as a new low or a first entry. And a double top's the same way. It can either be a new high or a first entry. So this is just the opposite, because they were talking about a second entry long. Well, this would be a second entry short that fails and turns up. That's a pretty good place to enter right there. So yeah, hopefully that's clear for everybody. Don't let that comment confuse you. So anyway, let's talk about the trade. You had to be a little patient this morning. We didn't get our first trade till almost 9 o'clock. 7 o'clock came. We were right down through here. I don't think you wanted to take this first entry here. So you just kind of had to see it. And there's actually another short right here that's very tempting, but it's just a first entry as well. We've already had a break and a new low, and then we made a higher high here. So I'd be real careful wanting to get short. I'd just sit tight and see if you don't get a second entry. You do get a second entry, but by that time you've kind of got a trend working higher here, and you just kind of get congestive here. It's real tempting to go long right there, and it would have worked, but after the fact, you don't know that. I mean, you see that, but while it's real time, this looks very congestive, and you can see it backed up here again and then went higher. But this is not really a breakout pullback long here, so I'd just stay out of this. And then now you got two legs up, and then you're working down, and you got a little trend working down. Notice that new high, then a first entry, and then a second entry, and it actually breaks higher and turns and goes out the other side. There's a good chance you may get another leg down like this. That's a really strong leg. down, and a lot of times prices will come back and test that again. So I like looking for a short there. You got to draw your trend line off these first two swings just in case. And then it does bounce here, so you would have been out of this trade. I don't like going long quite yet. We don't quite have a new low. It does kind of confirm that trend, so you got a break. I'd wait on a second entry, and you actually get a second entry long right here and a failed second entry short. So that's the place to go long. And you might consider that one right there. That's a possibility. I probably should mark it green. But it's a possibility. But I'd wait and see if you got a second entry, and you get one right there. And that turns out to be a nice trade. And you can see that most of your smarter traders are going to jump in right there. And then we're working back down. But you got a trend channel that seems to be working up here. And notice that new high you're working down. There is a little tick higher and then the second entry right there. You don't definitely want to take that. But then when you get another leg down, on a bigger picture, this would be a second entry. This is really one move here, even though there's a couple of swings in it, and then you get another move here. So on a bigger picture, that's a true second entry, and I just really count that as one leg, even though you get a little tick up. So you can kind of look at it as one move down, and then there's your correction, and there's actually just a couple of swings in that first correction there. And then it takes off again right down here at the key entry point. Now you got to break outside a new high, so you got to be careful. But you got two clear legs down right here, and you got enough bars there to really consider that a trend. That's your break, your new low, and you get a second entry down here right near the key entry point. So you may consider that one as well. I'd be a little bit leery of that one though, because you've already had a break and a new high, plus you got an overshoot here, what looks like an overshoot. So I'd be very leery of that swing or this two legs down. But it is a second entry long. It is with the trend. It is at the key entry point. So something to consider. Then you work up. Turns down again, and you get that. I wouldn't go short quite there, but I'd go ahead and draw my trend line, and then you get a confirmation over here, and it breaks higher and turns and goes down. I like just going short. You could wait for that bar to end and go short below it, but that's a pretty big bar. So I like when it broke higher and turned and went out the other side. I like having a sell stop one tick below this bar to the right here, to the left of the signal bar, and trading that as a lower high. And I'd be looking for another leg like this, and off it goes. And then you get another second entry short here. Notice you got a double bottom, so you can count that as a new low, or you can count it as a first entry. If you count it as a first entry, you probably would have got burned on that trade right there. But if you count that double top as a first entry, and then you wait on it, there's your first entry short, or a new low. I'm sorry. Count that as a new low, and then you get your first entry short, and then it breaks higher and gets a second entry short. So that one's a little confusing. That's also congestive too. So you could look at that as a failed breakout. So that one is there's not much you can do except say, hey, if you took that trade when it turned back down here, I'd jump in and take my money back. So that one right there is that's a very tempting trade, a pretty good setup. The only thing I'll say here is you've already had two measured legs down, and you've got that trend line. You don't really have a lot of bars, so it's hard to call that a trend, but it's there. So with a trend, you might wait on the second entry. That might have kept you out of that one. But really, I'm going to look at this, and I think most of you should look at this as congestive, and then it breaks higher and it turns down right off the key entry point, right off the EMA, and so that's very tempting. So you could have gotten, if you took that trade and got burned, don't beat yourself up over it. It's just one of those trades where it just doesn't work out. So, but that's really hard to call that a first entry. It really is. I mean, you're just going sideways there, and this bar ticks a little bit lower, so that's really hard to call that a first entry. I'm just going to call that basically. This is why you can count it both ways, And I basically is a new low, and then first entry, and then you try to go higher and get that second entry, and then everything works out. So that's the way I would have looked at that. You got a higher low right, or I'm sorry, a lower high right here, and a big bearish bar, but it's right into the previous support. You don't want to be going short there, and you see what would have happened. It bounces, and you would have got burned. But notice the new low. You get a first entry. You're moving up. You push through the EMA. You come back and test it on a second entry that fails and turns up. That's a perfect little reversal pattern coming right off the lows. That's where you want to go long. It runs back up to the highs. The high, we actually got up to here originally, but the last couple of times up, we made a double top. So you've actually got a double test here of this. Notice you made that high and you tested it once, tested it twice here, but that bar is just, even though you got a break and a new high, there's too much stem there. You're a long way away from the EMA, so it's a shame you don't get a better entry right there. So anyway, and then you drop down here and you make a first entry, second entry, and this kind of looks like a repeat pattern of this right here that failed. And so I'd be real leery of that, very leery actually, because it looks so much like this pattern right here where you're kind of going sideways and you get that little failed break, and then you're kind of going sideways, you get that little failed break. Only difference is that this isn't off the key entry point. So that makes that even more suspect. So I'd skip that trade. I went ahead and made it green because I wanted to point it out and talk about it because it looks so much like that setup right there. And then you run back up here. You actually make a new low, and then you get a first entry and then a second entry, but horrible signal bar. But then you make a lower high right here and you get a nice bearish bar. I like going short right there. And you make another lower high right here off the key entry point on a little breakout pull back short. It's actually quite a bit of support right across there. Notice how we push through there, come back and test that. You test the trend line and the EMA, and you still got room to get out. And it drops down. There's another nice bearish bar there, but again, it's right into the support. You can't go short. And that takes you into the 1 o'clock hour. And the only thing I see after that, this one is tempting. It's a second entry long. Notice you got a new high, first entry, and then second entry. But you're going long right into that strong resistance, which actually it actually bleeds over to way over here. But then you kind of get a breakout pull back long, and right off the key entry point again. And it's not a great setup because you've already had a close outside. You don't have a new high yet though, but we're probably headed back to the top. That's what you would expect prices to be doing. We've been going up, down, up, down, up, down. So you'd expect it to try to come back up here somewhere. And it actually takes off there. And that got you into the 2 o'clock hour. I didn't see anything else I liked after that. Notice too where prices came to here before they turned down. This is where prices closed yesterday. This is where they opened on the daily chart today at 8:30 a.m. And so there's a gap between that yellow line and that red line on the daily chart. And notice where that price action went to before it turned down. Okay, had a little interruption. I think we were just finishing up and talking about it was just a range day. So you can see we had a real steep trend down during the overnight, and then we had a trend up, trend down, trend up, trend down, trend up, trend down. Exactly what you'd expect on a range day. So nothing really unusual today. Of course, there was the FOMC announcement that kind of took a piece of the day out in the afternoon, but there's still some nice trades here this morning that shouldn't have been too difficult. So anyway, I'm going to wrap it up. We'll be back again tomorrow, wrap up our week. But I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.